company's competing against, a little company like Amazon and doing well. Who can say that? Welcome to the Drill Down Earnings, a quick look at the latest earnings from Spotify. I'm Cory Johnson, the Chief Market Strategist for Futurum Group. And really important quarter for Spotify. Things after some really big cutbacks for the company. How do they look? Kind of good. And the company's competing against, a little company like Amazon and doing well. Who can say that? Stock is rallying. Why? Will they report a fourth quarter earnings? They were good. Wall Street likes a beat or a miss. And yeah, I guess this was a beat. The revenue's in line. Profits well above estimates, and maybe user growth, the big story here. But we want to dig into the business, not just the miss or the beat. Here's what the business and the actual numbers. $3.94 billion in revenues. That's up 17% year over year, 16.8%. We're calling that 17. If you look at profits for this company, also $84 million in profits. That's down on a year over year basis. But in their GAAP numbers, they report a GAAP loss, or non-GAAP loss, I should say. But their GAAP numbers, profits of $84 million in the quarter. Monthly active users, always the big story, and that was good for this company. If we dig deeper beyond the headline numbers, they're cutting expenses. Now, the company remains dominant in music. They offered no guidance on what's happening with their big universal music dispute. Nonetheless, cost-cutting seems to be really working for this company. They're promising things are going to keep getting better. So huge layoffs at the end of last year. They cut 17% of their staff. Thousands of people let go. I think over 2,000 people out of the 9,000 workers. And so they're really focused on getting some divisions profitable. Very importantly, podcasts. We're a big fan of podcasts, of course. The podcasts, they say, are going to turn profitable for them this year. And they're bullish on the ground they're gaining in audiobooks against Audible. And I'm a big Audible user, love me some Audible. But they say they're gaining ground and market share in Audible. And of course, they're taking on Amazon, which owns Audible, which is a really powerful statement in and of itself. So how did the stock react when these numbers came out? It went straight up. Look at the chart. Stock up 5% on the news that podcasts will turn profitable, that user growth was super strong. Selling off a little bit over the course of the day. If you look over the last year, however, great year for Spotify. My goodness, 93% improvement in the stock price in the last 12 months. Now, CEO Daniel Ek talked about and focused on something he's talked about for years, saying the monthly active users of their service is the most important determinant of their long-term success. And it is the thing above all else. Even as they're cutting costs, he is focused on MAUs, or monthly active users. Here's Daniel Ek.
I've said this before, but I'll say it again. MAU growth sooner or later then translate into conversion to subscriber. That sooner or later then translate into revenue growth. That sooner or later then translates into bottom line. And so given 2023, I feel really good about our ability to have healthy revenue growth throughout the year. And with this smaller cost structure that we're having because of the focus on efficiency that we had really throughout 2023. We talked about it on the podcasting side. We talked about it on the employee side, but also with cloud costs, all of the other things that we've been focusing on. That should give you confidence that 2024 will be a great year.
So yeah, one of my favorite CEOs of all time, Daniel Ek, has built an incredible business, still managing the startup that he created long ago, from Scandinavia of all places, right? Fantastic business, globally dominant business. But how does a company cutting costs and focusing on user growth? What do all these numbers really mean? And what's the big drill down earnings takeaway on one number that means a whole lot? We'll have all that right after this.
The Drill Down is brought to you by the Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, here's a big drill down earnings takeaway on the earnings from Spotify in the most recent quarter. Pretty good quarter in terms of sales. Call it $3.9 billion in sales, up 17% year over year. Not a profitable company from a non-GAAP basis, but from a GAAP basis, net income of $84 million. But the big important number here is cost cutting. Cost cutting from Spotify means they're looking at some profitability in the future as the bigger important number, that one number that means a whole lot, user growth, MAU. So users up 23% year over year. That's not your number. Your number, 602 million. 602 million active users every month on Spotify. Of course, the biggest number ever for them, 23% year over year growth. Now, those are the users who don't pay. The subscribers who do also up 236 million users paying, the premium users. That growth bodes well for Spotify for now and for the future. And that's why the stock is rallying today. Thanks for listening to the Drill Downs earnings. I'm Cory Johnson. A quick earnings takes on Instagram and TikTok at DrillDownPod. For the more robust earnings report, you can check us out on YouTube at the Futurum Group channel. You can also follow me on X at CoryTV. Follow, like, subscribe, and please comment. We want to hear from you and what you think of our take on earnings and what you think of the earnings. Drill Down Earnings, part of the 6-5 Media Group.